It's official. Bitcoin's down 32% in the past month as I record this video today. For most people, that's a reason to panic, but for others, it's the best Bitcoin news they've seen all year. Because if you've been through a few Bitcoin cycles before, you already know this isn't new. The story is the same every time. Prices fall, sentiment collapses, and then when everyone's looking the other way, the next boom quietly begins. But here's the thing. Drawdowns like this don't just set the scene for the next wave of opportunity, they can be huge opportunities in themselves. Every major Bitcoin drawdown in history has handed the biggest advantage to the investors who stayed calm while everyone else was reacting emotionally. So if you're feeling anxious about Bitcoin's price action this month, stick around. Because by the end of this video, you're going to see exactly how smart investors turn crashes like this into opportunity by lowering their cost base, using tax loss strategies to their advantage, and coming out stronger on the other side. When Bitcoin's crashing, it's easy to think something's broken. But in reality, this is what markets do. They rise, they fall, and in between, they test how you think. Because when you zoom out, volatility doesn't look as catastrophic as it feels at the time. Over the long term, volatility is what drives performance and returns. Without it, an asset's price wouldn't go anywhere. So getting back to this Bitcoin crash, the investors who do the best through these cycles aren't necessarily the ones with the best market timing. They're ones who can keep perspective when everyone else loses theirs. The market isn't testing your intelligence, it's testing your patience. If your strategy only works when prices go up, you don't have a strategy, you have a mood. So before you make any decisions, buying or selling or whatever, you have to get your mindset right. Because if you can't stay calm through a 30% drawdown, chances are you won't through a 200% rally either. So how do you stay calm then? Simple. Data and strategy. Data helps you disconnect from emotion. Strategy helps you keep your long-term goal in focus. When you can see your numbers, your cost base, your performance, your history, you start making decisions based on reality and not emotion. That's the difference between reacting and responding. Reacting is what happens when you look at the price chart. Responding is what happens when you look at your data. And when you can do that consistently, crashes stop feeling like a bad thing and start feeling like opportunity. Just ask all the hardcore Bitcoiners gladly buying sats from panicked sellers. Let's talk about the first practical move smart investors make during times like this: lowering their cost base. When markets sell off, most people freeze. They watch the red numbers and just hope things turn around. But smart investors, they use it to lower their cost base. By buying more at a lower price, you lower the average amount you paid for each unit of an investment. If you believe in Bitcoin's long-term future, then a 30% pullback isn't bad news, it's a discount. You're getting the exact same asset you wanted before, just at a cheaper price. This is one of the simplest yet most powerful ideas in investing. Your cost base determines how much upside you have when things recover. So let's say your cost base for Bitcoin is around $120,000. Now it's trading near $90,000. If you add more at these levels, your overall cost base moves down, meaning you'll break even and eventually profit on your overall position much sooner when or if prices rise again. You're not trying to time the bottom, you're improving your average. And that's what long-term investors do. They don't buy when it feels good, they buy when the price makes sense for their overall strategy. And the thing is, you can't make that kind of move intelligently if you don't actually know what your cost base is. And I see this all the time. People just trading on emotion, moving coins between wallets and exchanges, and they have no idea where their real cost base even sits. And if you don't know that number, you can't recognize a good opportunity when it shows up. That's why tracking really matters. When you know exactly what your current cost base is, you can clearly see how buying in a market like this will impact your portfolio performance positively. You'll hear people talk a lot in this market about buying the dip, but most of them don't actually grasp why buying the dip makes sense for the strategic investor. They think if they buy, then the price might recover faster and they can stop freaking out. What you're really doing is using downside volatility to build a more robust portfolio. So lowering your cost base is one smart move during a crash, but there's another one that can flip losing positions into valuable tax benefits. Let's talk about that next. When the market's down, it's easy to feel like you're losing. But the truth is, losses can work for you if you know how to use them. It's called tax loss harvesting. And it's one of the smartest strategies long-term investors use to get something back from a down market. So here's how it works. When you sell an investment that's dropped in value, you realize a capital loss, and that loss can be used to offset your capital gains, reducing how much tax you pay on your overall profits. So let's say you bought Bitcoin at the all-time high, and right now it's sitting below your cost base. You're down, maybe a few $1,000s. If you sell now, that loss becomes realized, and you can use it to offset gains from other parts of your portfolio, like shares, ETFs, or other crypto assets that you've sold or might sell at a profit this year. So instead of just holding a paper loss, you're using it to actively reduce your taxable income. Now that's not avoiding tax, it's taking legal advantage of the tax laws as they're written. So when you combine this with a clear picture of your cost base, you're not just reacting to the market, you're managing your portfolio strategically. You're turning volatility into opportunity. You're using the numbers, not emotions, to make smarter decisions. So down markets don't have to feel like defeat. For the investors who track, plan, and respond strategically, they can become some of the most valuable times to build long-term wealth. For some investors, I won't be surprised if this current Bitcoin crash or correction proves to be a brilliant opportunity for lowering cost bases, harvesting losses for offset, and capitalizing on emotional investors' short-term thinking. Now let's talk about how to actually put these ideas into practice and the tools that make it really simple. So let's bring this together. Yes, Bitcoin is down this month. Headlines and social media feeds are filled with panic and anxiety. Investors who bought into FOMO at the prior highs are now deep in the red. But if you've watched this far, you know that the serious strategic investors aren't letting their emotion dictate their trading or decision making right now. They're not panicking. They're seeing opportunities to lower their cost base, harvest losses, and benefit their portfolio over the long term. They don't pay so much attention to headlines as they do their own portfolio data. The better you understand your own investment objectives and portfolio performance data, like your cost base and your capital gains and losses, for example, the more clearly and unemotionally you can think about market volatility. Maybe this drawdown lets you lower your cost base. Maybe it gives you a clean way to offset capital gains elsewhere in your portfolio. But flipping market moves like these into opportunities hinges on proper portfolio tracking and record keeping. And this is exactly why I built Navixa. It's the highest rated portfolio performance tracking and tax optimization platform in Australia, trusted by thousands of investors, many of whom own Bitcoin and crypto and aren't content to let the media or the internet tell them how they should think or feel when Bitcoin's crashing. Thanks for watching. If you enjoyed this video, got value out of it, subscribe to the channel, drop a comment below, and check out one of our other videos.